Are you concerned about these shortfalls? Is there something that Congress should do in your view?
Well, absolutely, I'm concerned. Just listening to your last segment, when we think about what was taking place in December and January, market volatility is really a big uncertainty on the financial markets. You think of the shutdown, you think of the tariffs and the trade war that the president was in. You think of the fact that there was the president undermining the Fed, with reference to his independence. All of that had to do with it on top of what was discussed. And so therefore that severely hurts states and the kinds of things that we're trying to do in New York.
It's interesting that you mentioned the uncertainty on Wall Street, Congressman, because you also, it sounds like you are amenable or open to the idea of the Wall Street transaction tax, which would create yet another uncertainty on Wall Street, especially for a state that depends so heavily on the securities industry.
Well, you're right. I am concerned, and I'm not in favor of the transaction tax for that reason. It will disproportionately hurt New York. It will reduce incomes of many of our businesses and the incomes of others. The money will go directly to the federal government. The states then will be taxing less. We will be losing more in New York. So if you add the SALT tax with the transaction tax and the fact that, probably what we will be doing, Democrats would want to move out, I'm sure, the pension funds, et cetera, so that we can make sure our pensioners won't lose money. Then that takes money out of it also. So it just changes the value, the assets, the value of assets. It makes more uncertainty in the market. And given we don't know what the president's going to do in the future also, I just think it's a bad move at this point. In Europe, it's still a question mark. I know some of my colleagues talk about where they're doing it overseas, but everyone that I talk to from Europe, I've recently been there, it's still a big question mark. And I think that what we need to do as a New Yorker, we need to make sure that we have some stability.
Congressman, part of the problem is that these states, in particular New York, California, Massachusetts, Connecticut, they are so dependent now on a small group of taxpayers. The 1% pay 46% of the income taxes in New York State. Those wealthy taxpayers derive a lot of their income from the stock market, and that income is very volatile. How do you solve that in the long term? How does the federal government solve that in the long term? Even on a federal level, the top 1% pay 40%. How do you smooth out those trends, or how do you either broaden the base or somehow change the revenue planning structure to better adapt?
Well, I think you have to broaden the base. You have to get more individuals to lower and to close some of the financial discrepancies that individuals, income inequality. We've got to figure that out. We've got to make sure.
What does that mean? How do you broaden the base but also make sure that the inequality is met out? What do you?
Here's what I think. I think that we need more public-private partnerships. I think that you can get some of the businesses to do greater investments, like we were talking about with Amazon would have done in the city of New York, putting investments in neighborhoods and schools, making sure that we're creating.
Yeah, but Congressman, you were part of the team that was trying to renegotiate with Amazon, which is part of the reason that they left.
No,
I remember having you here on set and talking about this, and you were on your way to a meeting with Amazon back in Washington that day. You wanted to renegotiate the deal.
No.
They just said forget it.
No. You got that wrong. I was a big proponent of Amazon,
you were a proponent,
and I think that it was a mistake.
But you were not a proponent of the deal on the table. You wanted to adjust the deal. You wanted to have a say in how that went down.
What I wanted to do was to make sure that when we talked about inclusion, I wanted to make sure that minorities and women, et cetera, would be included in the deal, so that the jobs that were being created. But there was a deal on the table. You wanted to change that deal, and that's part of the reason that Amazon picked up and walked away. That is incorrect. I was a sign-on with everyone else, with the governor. I worked very closely with the governor. A lot of individuals, and part of it, the deal wasn't a deal that was signed and said this is it and that's period. The deal was something where Amazon was talking and trying to engage folks in the community, like me, to say what they would do and how they was going to do it and what we were looking for. There was dialogue and conversation. That takes place in any and every deal. And so that's what we were doing. We were having dialogue and conversation to make sure that individuals like folks from the Urban League was talking, and Amazon was very amenable to it.
So what do you think about them walking away?
Well, I think
what happened? What went wrong?
Well, I think that they were uncertain with what would take place in the state legislature, particularly with the commission that had some oversight on the deal. And I think that there were a few people because most New Yorkers favored the deal. There were a few people that made a lot of noise, and they decided they were going to pull away from the deal as a result of that. I do wish that Amazon had stayed in the deal and had a little tougher skin in that regards, because that's what happens in New York. There's a back and forth in that regards. But overwhelmingly, the people of New York and the elected officials, especially those of us from Queens County, was very supportive of the deal. We wanted them here. We thought the creating of the 25,000 tech jobs plus some was a very good thing. We thought that the investments that they were looking to put into some of our schools, whether it was public schools or community colleges or four-year colleges, was something that we need to look for in the future. So we were very much a part of that. We do believe, and I do believe, that all of the industries. I mean, when you talk about financial services, those doors have to be open. I need more minority asset managers managing money. I need more African Americans on platforms.
We've got our guest, Sam Zell, here on set. I just wanted to bring him in. He wanted to make a comment here.
I just think Congressman Meeks that what you're describing is tyranny of the minority. I think this deal with Amazon is going to go down in history as one of the great mistakes that politicians made in their own interests and disregarding the interests of the state of New York. I think that the idea, from Amazon's point of view, there was never an end to the negotiations. They thought they had a deal. And then you're basically saying you're going to New York going to Washington to improve the deal. I do deals for a living. Certainty is the most important issue in any transaction. That's what builds confidence. I think Amazon walked away because they saw a never-ending strew of people and no leadership saying, this is the price we pay for progress. And this progress is very important to our city.
Well, let me say this, though. I think that there was a minority of individuals that were against the deal. There was a lot of voices, like the governor and the mayor and a number of elected officials. If you go down, the people, that was Carolyn Maloney's district, she was for the deal. I was for the deal. Kathy Nolan, who's the assemblywoman, she was for the deal. If you look at the borough president was for the deal of Queens County. Right. If you look at the number of individuals they were more for the deal than against the deal. And that's why we've been trying to get the deal back on the table.
I think I think I could convince Chicago to take whatever deal you got.
I do believe we got to be inclusive in any deals, though.